Hey everybody, welcome to this free edition of our Trader User Group, a weekly roundup for the trading week ending Dec 2019. I'm Preston Brent. Thanks for tuning in. Well, this week's theme is market uncertainties decrease. What we've seen globally this past week, just about all global markets, that the main markets finished up in the green. It's rare that we get them all up. The Dow, S&P, NASDAQ, the Russell, all in the green finishing this week. We also had the FTSE, the London Exchange, finishing in the green. CAC 40, the DAX, the Nikkei was in the green over in the Asia Pacific area. China, Hang Seng, all in the green for the week. So clearly the markets like some of this reduced uncertainty in the market. More on that in just 1 minute. The current trailing PE ratio is still sitting at about 20.96. That's the prior 12 months. The forward PE is at 19.27. So it's lower by about 8%. Now, if you guys recall earlier in the year, the forward PE was about 20% higher than the trailing PE, but now we've seen some of these valuations kind of come back down just a little bit as analysts reduce some of the forward earnings guidance from U.S. companies. The annual dividend yield of the S&P right now is sitting at 1.84%. The 10-year interest rate's at 1.81. So when you got the dividend yield higher than the interest rate, then good things happen in the markets. In fact, if you look at the statistics, since 1926, market returns are boosted sharply when the dividend yield is around the 10-year U.S. Treasury. Now, here the U.S. dividend yield is actually greater. So it generally pushes money into the equity markets. In fact, going back to the early 20s, it really doesn't start to affect the markets until we see a rise of the 10-year interest rate over 2.5%. But the forecast for next year, the rates are forecast really to stay very, very low. Really, the only outlier would be a sudden surprise shock to the system with increased inflation, but most market analysts aren't seeing that. And I don't really follow a lot of the analysts, but I don't see that as well. So that's something that we need to really take a keep on our minds here. But as I said, some of the uncertainties have been lifted from the market price action. So that gave us new all-time highs in most of the US indexes. The only exception really is the Russell 2000. It did make 2019 highs this past week, but we're still away from the all-time highs that the rut made last September, early September 3rd, I believe, in 2018. But the uncertainties in the markets have decreased. I mean, we saw a clear election victory by Boris Bulldog Johnson, and we've seen this agreed to, although it's unsigned, agreed to in principle phase one deal with China. So the markets seem to have really liked that reduction in uncertainty. Now, keep in mind that while a lot of the TV talking heads seem to be focusing on what's being said or what's not being said in this agreement, at the end of the day, it reduces uncertainties in the market, and price action loves that. The worst thing for price action in the financial markets is not knowing something, and that uncertainty increases risk. So we've seen some of that come out of the markets this week, for sure. Keep in mind that this proposed deal, what we do know, is going to result in a minimum net swing of about 62 billion in tariffs next year, meaning they're going to come off the table. It's going to be about 30 basis points of GDP bump just from what we know already. So this is a net positive for the markets. Now, we did see that for price action. Now, throw on top of that on accommodative central banks around the planet, from the US Feds to the ECB to the Bank of Japan, that allows us to finish this year 2019 in a very strong fashion. Now, the Fed's holding interest rates at bay this past week. As I'm saying, they did meet, and Jerome Boom Boom Power Ranger Powell, he did say everything that he needed to say. So he's pretty much committed right now to an accommodative Fed through 2020. Low interest rates have also played a strong role in the market performance, not only for 2019, but for this past decade. So we've got to just kind of stay on top of that. But as long as inflation stays at bay, then we should have low inflation or low interest rates through most of next year. But keep in mind that all this easy money, there is a cost for it. All right, it tends to inflate PE multiples, As I said, the forward PE right now is sitting at 19.27, and that PE multiple can go up as interest rates stay depressed. Okay, easy money has also financed the U.S. oil shale and fracking boom over the past decade. That cheap money has allowed a lot of money to flow into the fracking boom, which all these new technological developments over the past decade has allowed the U.S. energy industry rather, this past September to be a net oil exporter versus importer of oil. So all of this stuff, has resulted. Right now, the global share, I think, of U.S. oil production in the U.S. has risen from a little under 5% to over 20%. So we've now outpaced both Russia and Saudi Arabia. And with that comes a lot of global economic strength. So that's a good thing. So that's also easy money financing that as well. Now, another interesting stat, because we've moved up pretty strong since early October in the markets. We've seen the RSI, the relative strength indicator for the S&P, move up over 70, come down just a little bit, but kind of staying around 70, slightly above. And if you look at the stats going all the way back to 1933, anytime the S&P has moved over 70 in the RSI on a daily chart and have held it for several days, then on average, 26 weeks following the RSI falling below 70, the S&P has averaged a gain of 6.1%. And then if you go out over a year, over 52 weeks from the time that the S&P RSI held over 70 for a few days and then pulled back, the average gain was 11.5%. So, the whole idea being that when you have a very strong RSI reaching these higher levels, it does show a lot of strong momentum behind all these price gains, which means even though I could see a little bit more volatility coming into 2020, the probability of the markets continuing higher are still very strong, let alone we've got a key election next year too. So towards the end of this year for members, what we'll probably do is I'll give you a view of where I see some really interesting asset plays for 2020. We'll do that at the end of the year, maybe the beginning of January. We'll kind of just do a recap of 2019, but I think most people are more interested, for our members anyway, most of our members, most of you are interested in where we're going to go for 2020 and 2021. So there's some key asset classes that we want to track. For those of you that are not members of our group, this is a good time of year to join up. We're having a really good time. I know we've got Christmas special coming out, and you should probably see it below this video here. So, and it'll probably run for the duration of this December, but you want to take advantage of it. We have a lot of really good things going on with the markets and with our group and with our performance here. So this is kind of what I'm seeing. Now, what you see on the screen right here is a 240-minute view, an Ichimoku on the E-mini S&P 500 futures. You can see here that we've just blown through these movements here, and we kind of paused and just having a little bit of difficulty getting this extension here, this 1.5% extension or 50% extension off prior pivot highs, which were defined by me. It took us quite some time to clear our former all-time high. So I use that as a prior pivot high. The prior pivot low, of course, was in December of 2018. So these are really good, strong pivot points. And you can see here how we've hung up at this level right here quite some bit, right? And we just having a hard time at getting escape velocity to move up. And we finally got that. We got a signal here in December 6th or 7th to go long, and you can see the cloud moving up, which represents support underneath, and because it's green, that does suggest that the tendency is to move higher. And you can see here there is no divergence on the MACD the way we use it, which indicates that any pullback here is going to be bought. You can see here we had a little bit of a pullback on this 240-minute chart, and we're coming right back up again. All right, so if I were to step this out just a little bit more and kind of just show you what the next stop off point is going to be, it's the 1.61 extension off prior pivots, and that would be just slightly over 3,200, and I can see that as well. All right, there's just a lot of momentum in the charts right now, and you're going to see a lot of asset allocation and movement in portfolios as we move through the end of the year. You're going to see a lot of folks selling assets that they haven't been making money in. You're going to see them moving into asset classes that have been moving up. lot of tax purpose redistribution, selling, trying to claim tax credits for this year and so forth. So that's going to have a tendency to move the markets up a little bit also. Short of any wild Trump tweet or anything unknown out there, then the markets, the propensity is going to be to move higher. Now, if I put it on the daily chart, we'll just edge it up just a little bit. And you can see here on this daily chart, this candlestick here would indicate that we could get a little bit of a dip here. Okay. Now, if I look at the volume, if I put it on volume here, you can see now on my volume chart, you can see I run a 5 and a 20 EMA on volume. So anytime the purple line, which is the 5 EMA, falls below the blue line or the 20 EMA, volume is going down and vice versa. And you can see here on this chart clearly every time that we've had, a down move in the markets right here, volume has moved up. The purple line's moved up above the blue line. Here's another down volume. Here's the volume right here, right? Anytime we've moved up, like you can see this big move right here, you can see volume has moved back down. And then anytime we had just a brief sell-off here, volume has moved back up, and then it quickly comes back down again. So we're not sustaining higher volume levels. Now, part of this is to be expected as we move through the end of the year, and then the holiday season volume is going to dry up again. And then we're going to see volume kick back off. But ideally, I would like to see volume kick in when we're moving higher. So that just does tell me that we're getting a little bit stretched here to the upside. Okay. So that would be something that we want to keep our eye on. I do believe that even if we do get a little bit of a dip in the markets, I suspect we're going to move higher. There's going to be buying on that dip. Now, if you look at the daily chart, you can see the unbalanced volume. It's still moving up very strong. And then the accumulation distribution, I mean, it's just a rocket ship up, guys. Money's coming into the markets, that is for sure. And then, of course, if we come into the RSI, this was where I was telling you that we were over 70. Now, in the RSI here, you can see unlike and this is on a daily chart. You can see a little bit of a bearish divergence here on this RSI. And if you look at that candlestick, it does have the makings of a doji kind of candlestick, which would suggest that we could pull back a little bit, right, as we open up next week and then maybe finish off the last week in December in a strong fashion, have a little bit of a dip, a little bit of a chop, and then we can just move it back a little bit. Okay. So that's just some of the things that I'm seeing in the market. Now, of course, let me just switch my screen over here and take you over. Let me just go over to I've got so many monitors on my desk right now. I'm going to take you over to the same chart, but you can see over here, we made new all-time highs here on Friday at 3188, almost the 3200 area. I suspect we'll probably hit it once we have a little bit of maybe some profit taking here as we go through this, but I can see us having a run towards the end of the year. And of course, if we look at NASDAQ here, NASDAQ also, you can see here, NASDAQ, we made new all-time highs as well, right? And we're up at 85.49 right here with NASDAQ. And then, of course, if we look at the Dow, same thing with the Dow, right? If we kind of just shift over here, you can see we made new all-time highs with the Dow at 28,307. All of these, now you can see the MACD on all three of them would indicate that we're going to have a little bit of a dip here. Okay, a dip can be anywhere less than 5%, is the way I define it. A pullback is 5% to 10, and then a correction is 10 to 20, and then a bear market is over 20. Okay, the markets really only recognize a correction and a bear market greater than 10 and greater than 20. I kind of break it down a little bit more finite. I have dips and pullbacks. So a dip is, and we're in a buy the dip mode, which is less than 5%. Okay. So I can see us pulling back. There's a value area here sitting right around the 27,700 level, right? And that would be a 600 point pullback in the Dow just to take us back to that level. All right. I don't know if we'll go that far, but I do see a little bit of a softening in price here for a week or so. Okay. But that's where I'm looking at this. And if we come over and look at the Russell futures, the Russell futures was the only index that finished in the red on Friday. But you can see here, we did make new 2019 highs here, right? So we came in at 1660.20. So we made new 2019 highs, but we're well off our 2018 highs. Okay. Now, for those of you that follow me in this free update, I was telling our members here, and I think I told you too once it broke out, you want to be long either IWM or TNA. We've had this long stretch here of just trying to break through, and the breakout here was a good signal to go long. Also down in this area down here, once we break and we're moving up, it was also a signal to go long TNA or IWM or the Russell, because the Russell's playing a little bit of catch up here in the markets. Should this break and go higher, and should we have a strong run into January, early February timeframe, I can see the Russell taking out the 1746, which is a little bit less than 100 full Russell points, up, making new all-time highs as well. Okay. We are trailing right now a pretty good bit, but we'll see how that thing plays itself out. And of course, if we look at vol, I mean, the VIX fell down and closed the week at 12.63. Okay. You can see here we did move into the yellow, but we just could not get enough velocity to carry us up. We were in zone 2 for options trading purposes and just option strategies. Each one of these colored zones on the VIX would denote different kinds of option strategies that you want to deploy to at least leverage what volatility is giving you. Okay. And you can see here where we finished the week relatively low. Okay. Down at the 1263 area. Let's see here. Excuse me, I had to sneeze. And then, of course, if we look over at treasuries, I was telling you the 10-year. I mean, look at the 10-year interest rate, right? Look at this regression channel. There's clearly, the direction this thing is going in. We're making higher lows and higher highs. So we're moving up. I think we're going to get stuck right around the 2 level. We've got that level right here that we had a little bit of resistance in before. Let me just put it right over here. You can see it right in that level there. Okay. And then there's another level right here that we're going to get stuck in, I believe, right around the 197 to 214. We'll probably get up in this area here and run sideways a little bit within this upsloping channel here on this regression line. But I do believe the longer term is going to be just kind of gradually phasing up. That's going to be good for financials for 2020. Of course, if we look at the bond market, it's going to be just the opposite, right? I mean, if you look at bonds, you can see this move down in this regression channel here. For us in bonds, we were getting short bonds or TLT, which is a good way to trade bonds, back over here in in August, early August here. We got some really good early entry signals here to short bonds or TLT, just buying puts on TLT. It's turned out to be a really good trade. And you can see we're making a series of lower highs, lower lows, though that does suggest that we can come back a little bit. Now, if I take everything off the screen here, okay, and then I just put on here a fib node, and let me do this for a second here. If I put on here a fib node, let's just go back to a prior pivot right here with the fib node right back here. And then I just move it up. You can see here, if I lock it in, we're sitting right at this level here, this 0.382. You can see where over here it was some resistance and over here it's support. Should this break, okay, should it break, then that means we're going to come down and test the 50% fib node, which is around 152. I don't think that's going to hold, and I think it's going to take us down even lower, down in this area down here, okay? So this just kind of goes and encapsulates, the trade rationale that I've got for our members and what we're doing in some of these trades here, okay? And of course, if we look at currencies, how can we forget the British pound? I had our members going long the British pound. Now, I was saying the pound was moving up. Those that missed the early trade, we were stuck in this range here. I said if we break to the upside, next stop is 134. It actually went up to 135, but it closed right at 133.37 to the dollar. All right, so the pound is following the prescription that we had called out. I had called out actually. And we've got this overhead resistance here, so I think it's going to fall back into this regression channel here and kind of sort itself out until Boris Bulldog Johnson figures out just what he's got to give up and what he can get to get a Brexit by the end of January. So the pound is still longer term. The macro trend for the pound is going to be back up in the 140s. I think the micro trend, there's going to be some chop in here as they figure this out. But for us and our members, we were able to capture some of this stuff, which is pretty good. By the same token, I said the euro is also going to be moving up. You can see the euro is up off these bottom edge of the channel. it kind of came up and fell back a little bit. But the pound is the one that's going to be the strongest. The other one that I've talked about is the dollar. All right, I said this is going to get weaker. Now look at the dollar. Let's just get this off here, this darn screen here. Let's get it back off, get it back on here. So if we look at the dollar, you can see here how this regression channel, clearly it's higher. It's a very wide channel. And I had our members just trading this. We were selling UUP or shorting UUP up at the upper level and going long down here, or trading the euro in the opposite fashion. You can see here how the dollar fell below the regression channel and then just managed to eke out a gain just to put us right in here. I think in 2020 the dollar is going to get weaker. So for our members, we'll go into ways to play some of these currencies, some of these cross currents and currencies that I'm seeing for 2020. Okay, and that's going to affect not only currencies but the bond market here as well. Okay, now if we come down here and look at metals, we look at gold. Gold here is still solidly in this down, this regression channel here. But remember, with a weaker dollar comes stronger gold. It's stronger, but we're still in this down channel here. I think eventually gold is going to form a bottom here and then start to move up. So I'm not ready yet to call another long in gold. We had a long, great long signal back over here back in May. And we went long silver, but it's going to be the same thing. And if we look at the silver futures, you can see here with silver, same regression channel coming down. We're not ready to go long yet, but once we get some all clears, there's going to be some great trades there too. Now with copper, obviously with a strong China, copper is really good. So you can see copper's been moving up very strong. I had our members in Freeport McMoran, and I was suggesting this way back over here when Freeport McMoran was down around $9.42 a share. Now look at it, it's at $12.87 a share. You know, it may not sound like a lot, but that's a 25% bump at least the return in a very short period of time. Okay, so these are just some of the trades that I'm looking at for 2020. There's going to be some other similar things like this. So if you're a non-member, I highly encourage you to come in and check us out. If we look at oil, okay, now remember, look at this regression channel in oil. It's just beautifully formed, right in kind of the upper boundary of the regression channel, which is normal for oil. The other thing for oil, when it gets into this kind of mood, you can see it's a 0.87 regression channel, which means it's basically very tight, which means generally any dips are rapidly bought. I do believe we're going to get up in this area here, and then we're going to run into some trouble here with oil. But there's going to be some opportunities in it as well. If we look at nat gas, I'm hoping this thing goes down even further. I want to see it come well down in this area here. So there's going to be opportunities in nat gas. For us with nat gas, we were long nat gas over here and we started getting short right here. There was not a short signal over here, believe it or not. In fact, I was anticipating a buy the dip moment right here. We came down for a dip, we started to move up, and then we just gave it up. There's just so much supply out there. There was really not a buy the dip moment, even though the MACD was suggesting otherwise. Okay, but we didn't take the trade here. We did take this trade here, and I did recommend, shorting nat gas over here. So it was kind of a twofer. And we made money up, we made money down in the nat gas market. Okay. Now there's some other things, really interesting things with the China trade deal setting up in the ag market, in the meat market. And then there's some interesting things that we're going to be looking at for stocks for our members. For our non-members, highly encourage you to come in again. We're having a good time. Year-end holiday offers are probably what you want to jump on here. Have a great weekend, everybody. Members, I'll see you this Sunday night for our weekly market watch. Take care, folks. Ciao now.